Ladies and gentlemen, you're about to see breaking market commentary that could genuinely shift the way investors position their portfolios into year-end. What you're watching isn't just another Wall Street conversation. This is a major signal about how big money is rotating, what the wealthy are being told to do right now, and where the next opportunity may emerge as we enter a volatile quarter. Pay close attention. The tone from Morgan Stanley's Private Wealth Division says a lot about what's coming.
For more on positioning your portfolio into year-end, let's bring in Kathy Entwistle, Managing Director at Morgan Stanley Private Wealth Management. Kathy, great to have you here on set.
Thanks.
What are you telling clients? I mean, they call you right now and they're like, where are we in the markets? Because everything looks great.
Absolutely. We're taking these opportunities where markets have volatility. Those are always opportunities for making changes, adding money in as markets are going down, and also peeling off a little bit as they're rising.
You're advocating or you're proposing to your clients that they sort of scale back on big cap technology. How is that message being received on the other end?
Mostly,
cautiously?
Yeah, cautiously, but we're scaling back. We're not removing it, right? We're just scaling back. So we're pulling back a little bit. There were 7 stocks in the S&P 500 that blew up the whole S&P 500, did great. 493 still remain. We think there's still opportunities in those other stocks as well. So we're trying to be more equal weighted in a sense and pull back on some of the overweights.
What's changed in your view to move from an overweight to more of an equal weight on big cap technology?
Just the fact that there's been such a run-up, that there's been some issues with some of the companies not performing as well as they had been, and also that there's just more opportunity out there and we don't want to be concentrated.
So, Kathy, when you look at it, I understand the diversification and the 7 versus the 493, but those 7 have actually earned all the revenues.
Most of it,
so they've
absolutely.
been the ones. So how do you decide on where to diversify out of those 7? Are you looking small cap, which is unprofitable, in hopes that lower rates will help these companies? How do you decipher which ones you go to that have the revenue and the EPS tailwinds?
Basically, the S&P 500, U.S. large cap, we like just very basic generic companies in a sense that we think have the opportunity to take the AI that's out in the markets and run with it. So we're not necessarily looking at all the AI companies. We're looking at which companies can run using AI and where we're going to get the most pop for our money there.
I tell you, Kathy, both Tim and I are thinking of the great John Entwistle. I'm sure you've heard that
Absolutely.
before, but I had to mention it. With that said, private equity, I think you guys are trying to sort of get your clients involved. That's something new over the last couple of years. Can you speak to that?
Yeah, absolutely. So we all remember the days of the big IPOs and a lot of the wealth creation happening at that IPO offering. Now we're finding that companies are staying private longer and the wealth creation is happening before a company goes public. So in that respect, we want our clients to participate in that growth, and we are putting them in private markets.
So it's not really private equity per se, it's private markets specifically. So potentially these unicorns that if they went public, they would be unicorns, but they're staying private longer, like I don't know if it's OpenAI, but like an OpenAI.
Right, opportunities that where companies are staying private longer to be able to participate in that growth. Also, when you think about like infrastructure, we have private infrastructure, we have private equity, we have private credit. And private infrastructure, it used to be, bridges, tunnels, roads. Now it's data centers and, cell towers. So in that respect, you're getting access to maybe data centers that seem to be a very hot area to invest in right now, and you're getting easier access to it.
What you just heard is incredibly important. Morgan Stanley isn't telling ultra-wealthy clients to abandon big tech, but they are telling them to trim, rebalance, and diversify away from the mega-cap names that dominated this entire market cycle. That alone is a powerful signal. The key takeaway? When private wealth advisors start emphasizing equal weight strategies, private market exposure, and data center infrastructure, it usually means they believe the upside in the big winners is becoming limited, and that new sectors are gearing up for a breakout. And their focus on private credit and private infrastructure shows exactly where institutional money might be flowing next. And when they openly acknowledge client interest in crypto ETFs, that's another major clue. We're clearly past the stage of curiosity. We're entering early-stage institutional adoption, especially through compliant products like Bitcoin ETFs.
How do you view the entire portfolio if you are trying to scale back on big tech exposure, but then you've got the exposure in private equity or private markets to data center?
Absolutely. Well, it used to be a 60-40, 60 equity, 40 fixed income. That's not the case necessarily anymore. We're peeling back a little bit on the equity side. A lot of our clients have won the game. They don't need to take huge risks in the market. So we'll end up putting them, like maybe get down to like 55% in equities, add the alternatives. And we still like fixed income. I heard someone earlier talking about maybe munis aren't working. We think munis are going to be really great first quarter next year.
So get a little deeper on that risk curve. So what's the conversation like when you talk about crypto? Whether it's specifically Bitcoin or how they're investing in it? Is it through ETFs? What modality are they using?
Absolutely. We're using mostly ETFs. Clients are really curious and interested. I would say we're really at the beginning, the point of learning and understanding about crypto, or at least our clients are. So we're trying to educate them, trying to have them dip their toe in the water, and ETFs seem to be the area where they're most comfortable stepping into that area right now.
This is the Cryptagon. Stay sharp, stay informed.